is well enough that the people of America do not understand our banking and monetary system. If they did, I believe there would be a revolution before the next morning, American industrialist Henry Ford said about a century ago. Even though it has been many years since he said that, his statement still holds as true today as it did then. Still, we cannot say that banking is a bad option because it provides us with numerous benefits. Everyone wants to save their money in a safe place rather than hiding it in a cookie jar or digging a hole in their garden just to keep their money safe. The harsh reality is that banks are taking large sums of money from the public without being detected. The reason for this is the complicated operation of financial institutions, which the general public does not understand. It doesn't matter what we do. We will all end up in the same situation. It makes no difference whether you are spending or saving money, or if you are simply taking out a loan. The banks have numerous ways to profit from it. Unfortunately, you are being cheated out of your money and are unaware of it. In this video, I will reveal the 7 truths about money that your bank doesn't want you to know. But before I do that, please make sure you watch this video until the end and do not skip any part so that you don't miss out on those 7 truths that could potentially change your life. Also, please give a thumbs up. Don't forget to subscribe and turn on notifications. Number 1. You lose money every year. You've definitely heard that banks are the safest place to keep your money. But have you ever heard that you lose money every year because you keep it in banks? I'm not talking about service fees or having your money stolen by a thief. The real reason is inflation. Inflation occurs when the prices of various products rise from time to time. Something that costs $100 today may cost you more in a few years. When you put money in a bank account, you expect it to retain its value or grow due to interest. Investors also want to keep up with inflation rates. However, this is not the case in the majority of cases. According to recent statistics, the average inflation rate in the United States is around 3.2%. If your bank savings yields 0.2%, you are losing 3% on the value of your money saved in your account. It's not the money you invested. It's the money sitting in your bank account doing nothing. Number 2. The money in your bank account is not physically present there. Even if you have a large sum of money in your savings account, it is unlikely that they have placed the entire amount of cash in a locker labeled yours. They are simply numerical figures found in bank records. This fact became public in 2008, when many people panicked and rushed to withdraw their money. The banks lack sufficient funds to pay them all. Although the bank may have liquid assets, in the event of a public panic, it may not be able to pay all of its customers in cash, because banks do business with your money. It's part of a policy known as fractional reserve banking, which allows the bank to use your money to make loans. It does not make banks any less secure as a place to keep your money. Government and insurance policies protect your money. But keep in mind that it's not like keeping money in a box where you can get it whenever you want. In times of crisis, when everyone wants to withdraw their money, you may be unable to withdraw your money from your bank account. Number 3. Banks profit from credit card transactions. To begin, whenever you use your credit card to make a purchase, your bank receives a processing fee. You may not realize this because you believe you are only paying the cost of the product you are purchasing, but the seller may have already included the extra charges in the price. Let us use an example to demonstrate. Assume you paid $1,000 for something with your credit card. If the bank charges 4%, the $40 will go directly to the bank's profit for simply providing the convenience of payment. Do you believe the merchant will be happy to pay this amount out of his own pocket? Certainly not. Most businesses usually include these extra charges in the product price. That is, if a product costs $960, the business may raise it to $1,000, including a $40 fees, because most customers pay with credit cards. In the end, you're the only one who spends money. Second, by urging you to sign up for a credit card, the bank can make a lot of money. That is why they provide so many incentives while doing so. You might be surprised to learn that the interest rates on your credit cards can be raised. The average interest rate on a credit card is 17%, but a bank can raise it to 18% or even 25% at any time. They may do this after giving you written notice, but we usually choose to ignore such lengthy documents, which the banks take advantage of. It's even worse if you have compound interests, which begin to accumulate and put you in debts that can destroy your financial situation. I'm not opposed to the use of credit cards because they are a necessary part of our daily lives and are also convenient. However, we must exercise caution by keeping a close eye on our spending and paying off debts on a monthly basis. Real quick, if you guys are enjoying this video, which I've put a lot of time and energy into, I would really appreciate it if you guys tap the like button and make sure you subscribe with notification on. And if we get 2,000 likes on this video, I'll drop a brand new video next week about the same topic. Now, let's get back to the video. Number 4. International transaction fee. Foreign transaction fees are another way the bank makes money from its customers. When you use your credit card while traveling abroad, you are paying an additional amount without even realizing it. A friend of mine once went on a 2-week trip abroad. When he returned, he couldn't believe what he saw while reviewing his bank account statements. He was charged approximately $300 in foreign transaction fees. Some banks may never bother to inform you of this information because they do not want to lose customers. However, some banks have coverage in other countries, allowing you to avoid extra charges if you travel in any of the countries covered by their coverage. Unfortunately, my friend did not have these details and was severely charged. Number 5. The bank employees can never be your friends. Because of their friendly nature and caring behavior, I believe you must have considered bankers to be your friends by this point. They can recall your name and birthday. They talk to you and call you frequently. They celebrate your anniversaries. They show you love, and that's all there is to it. You're trapped by their well-rehearsed performance. I'll pass along the information I obtained from a bank employee. He told me that he does all the things I mentioned earlier to make customers believe that he is on their side. When he achieves his desired results, he persuades customers to sign up for a bank service they did not intend to use. Consider taking a $100,000 loan that you had not planned on. That is the result of unneeded friendship with bankers. They are not devoted to you. They are only concerned with the target set by their boss, which they must meet. If an employee attempts to be honest with a customer and his bank discovers it, the employee may lose his job. That happened to one of my friend's coworkers at the bank. The employee was fired because he failed to meet the set goal. So, if you ever come across a friendly banker with a big smile presenting you with the bank's latest services while signing for a loan, make sure you really need it. Don't get too worked up about the deceptive friendship. Now, if you're still watching this part of the video, please leave a comment down below to let me know that you're still watching. Share your opinions in the comment section. I would love to hear them. Now, let's get back to the video. Number 6. Always keep a check on your bank account. Without a doubt, your bank account has become an indispensable part of your life. Don't be too lazy or too busy to check it on a regular basis. There could be some additional fees. When you see a charge that you don't recognize, don't hesitate to contact your bank. According to the law, if you file a report within 90 days, your bank is required to pay you back within the next 2 days. If they try to get away with it, don't be afraid to confront them. It is your legal right, and the bank is obligated to provide it to you. Number 7. You are always being watched. Your bank monitors all of your financial transactions. They are required by law to report any suspicious activity to the IRS. This is done to keep illegal transactions and money laundering at bay. So, whenever there is a suspicious transaction involving a large sum of money, the IRS can investigate your account to ensure that it was carried out legally and that the tax was paid. I'll keep it brief. Whatever you do with your money, keep in mind that your bank is watching you. Now, if you want to watch more videos like this, then you need to watch this video right here. This video is one of the best on this channel. You can click on this video to watch further.